Welcome to Own the Chaos. The stock market is crazy and chaotic.
Crash. You son of
Oh, God. Hold on. Pause.
Brad and Fat Man Zoom are here to help you own it.
They were targeting Wall Street when they should have been targeting Capitol Hill. They should have been targeting DC. This is the same thing, and this is what people keep missing.
Taking it to the suits, being relatable and hilarious.
You bought GameStop at 400, didn't you? To the moon, baby. To the moon.
Get ready to own the chaos in 3, 2, 1.
What's up, everybody? Welcome to Stock Watch Sunday. It's your boy, Brad, and that's all that's here. Fat Man Zoom is not here today because there's a little golf tournament going on here in Maryland, and he was actually at the 18th tee where one of the best playoffs I think I have seen in some time just took place. And so he texted me, said, hey, listen, I'm not going to make it. And I said, I figured. And I mean, who can blame him, right? So what an incredible day for golf. If you guys haven't been watching, the BMW Championship has been here in Maryland. It's actually about 20 minutes away from the studio here. And I was there on Friday night, and just unbelievable. The place is incredible. The atmosphere is incredible. The whole thing was awesome. And so a Fat Man's there with Mini Zoom, and I think it's one of those situations where it's once in a lifetime opportunity. So can't be too mad at him for that. But nevertheless, we're going to carry on with Stock Watch Sunday regardless. And let me hit up the starting five here. That's G Money, Samson Snares, Parag, Juneha, McTagg, Steve King. You are our starting five. Thanks for showing up early, guys. Yeah, no kidding, primetime DJs. I mean, just what an absolute. I mean, the whole round, the whole championship was just crazy. Bryson DeChambeau probably should have been under 30 had he not gotten in his own head between yesterday and today. It was just crazy, just absolutely unbelievable. What a weekend for golf. But nevertheless, we have some crazy stuff going on, guys. I don't know if you guys, well, a lot of you guys are in the Chaos Crew, which, by the way, I see a lot of our Chaos Crew folks hanging in. If you guys are watching this stream and you don't have a Red Bull or a Green Bull or a bear next to your name, it means you're not part of the Chaos Crew. So if you want to get a watch list from us from every single day and just kind of give you a snapshot of what the market's doing, hit that join button next to subscribe, because let me tell you something. We've been talking about Affirm for how many weeks, Chaos Crew? Talking about Affirm and how this could potentially be a merger target. How this could, we saw the deal with Apple that they had a few weeks ago, and that was amazing. Obviously they had a lot going on with the Peloton issues, and that was actually something that made me nervous. And lo and behold, I actually ended up trimming a little bit of my Affirm position on Friday, just because I was like, okay, we're going into the weekend. We've had a monster week. I need to take some profit somewhere. The most speculative play I have at the moment was Affirm and Drive Shack, but Drive Shack was something that I just kind of let sit. So then I ended up taking a little bit of profit on Affirm, but still kept those shares in there, most of my shares that are in there. And so it just went off. So here's what the deal was. We take a look at the 5-minute chart, what happened after hours on Friday, and this is absolutely insane. The stock goes up 40% at one point, $103 after closing the day at 67.90, and it has just been absolutely insane. So what happened here? Well, they had another partnership. You guys recall a partnership they have with Apple in Canada, right? They have now one with Amazon, and that's why this thing went absolutely crazy. I'm up over 50% on this position, and this was something that we had in the watch list for our Chaos Crew. If you guys don't know what that is, we actually gave a breakdown of the stock, gave our thoughts. Obviously, it's not a buy list or a sell list. It's just something that you should, hey, here's what we think has some value. It might be worth just keeping an eye on. And so that's what ended up happening to our Chaos Crew. A lot of our Chaos Crew folks, shout out, guys. Put it in the chat if you're in Affirm, because we brought it to your attention. Certainly would appreciate the love if you guys got it. But this deal with Amazon, So purchases over $50 or can be now split up over time in what's called the buy now pay later system. And so this is actually really, really awesome. So it's great for Amazon and Amazon customers, sure, but obviously Amazon's just a behemoth, and they needed this kind of access because of what Apple's been doing. We saw that Square actually acquired another buy now, pay later company in Australia. So this is where things are going. We saw that Shopify actually does dealings with Affirm now as well. But this is actually really huge. If Affirm captures just 1% of Amazon's North America sales through its deal, it could add over $900 million or 10% to its revenue. That's insane. So that's why this went up as much as it did after hours. And I would imagine that this is going to go up even more next week. I'm not selling a dime any longer. Any kind of weakness I see is going to probably be bought up, and I might be adding to a position on this. And I think that, in my opinion, this is something now that Affirm is the real deal at this point. They're not messing around. So I'm curious about this as well, because we thought that Affirm could be a really good merger target for one of the big tech companies, whether it's Amazon or Apple or Shopify. And you think about now that they have dealings with all three of them. All three of them. Now, there could be another company that comes in out of the shadows here and scoops them up and makes a deal for a merger, because Affirm's actually not that big right now, relatively speaking. What's their PE, or their market cap actually isn't even really that big. You look at their market cap right now, and let me see if I can pull it up here. I had it. Hold on one sec. Their market cap is not that big. I want to say it's somewhere around 30, 40 billion. Well, before Friday, it was around 30, 40 billion. And so it's just crazy. I would imagine that one of these big companies is going to make an offer that Affirm can't refuse. The market cap's 18 billion. 18 billion is their market cap. That's nothing. It's like $20 for Apple or Amazon. It wouldn't surprise me. I actually thought that Facebook would be a good merger acquisition for Affirm. Now, the tricky part is that we've seen that Congress has actually had a little bit of issues that they've taken with some of the bigger tech companies, that they just keep acquiring other smaller companies and have created this monopolistic type argument with them. And so that's also, I guess, something that maybe has given apprehension to some of these bigger, the FANGs really, on acquiring something like Affirm. But I'm telling you, the acquisition's got to be coming here soon. For somebody's going to scoop up Affirm. I don't know who it is, but this seems like something that is just a perfect candidate to be bought up. And if that happens, then this is going to go even higher than where it's at right now. I think $100 would be a joke at this point. So we'll see. I mean, it's a small market cap. Everything looks great on this thing. I cannot wait for tomorrow to take place, because I just don't even know. I don't even know where this is going. It's hard to determine where that might be. If we go back and look at the chart here, it on a daily, it hasn't been anywhere close to $100 a share since really right around its IPO day. And we go back to the chart, we take a look, it got as high as 146, and that was, based off of a lot of hype. That was back in March. So this has a lot of room to go, obviously. I just don't know how high this goes, but this deal to bring in another 10%, if that, and that's just a staggering statistic. If they just bring in 1% of Amazon sales, that's 10% in revenue. And I don't know if people really fully grasp that. That statistic alone is just absolutely mind-blowing. So you're telling me that 2% is going to be 1.8 billion for Affirm? Wild. Absolutely wild. And I think they could do it. The buy now, pay later concept is something that's just rapidly growing in popularity, and you see Affirm all over the place. And I think that to a certain degree that this is actually probably going to I don't want to say take the place of credit cards, but I think it's going to definitely work itself into that market share. So that's something that really is just super exciting. And congrats to anybody else who was in Affirm with myself and the Chaos crew, because we absolutely crushed this one. And again, if you guys are not a part of the Chaos crew, where we had Affirm on our watch list several times early in the morning before the market comes up or opens up, hit that join button next to subscribe, guys. Got to hit that join button. We'd love to have you guys as a part of the crew. It costs $4.99 a month. You won't even miss it. It'll come out and you won't even notice it's there. You won't even notice it's gone. So, if you guys are liking the stream so far, hit that like button. We got 92 of you hanging in here with 26 likes, which is kind of weak sauce. I see you guys in the chat getting people to hit the like button. So, yeah, if you guys haven't hit it already, please do. Certainly would appreciate it. Mr. DeSoto says, I've been holding Affirm since mid-June. Isn't buy now, pay later also called a credit card? It's kind of, but not really. You have a much higher probability of getting approval from a company like Affirm than you would like an American Express, for example. So there's definitely benefits to it. So anyhow, I see a lot of people asking about Fat Man Zoom. Fat Man Zoom is not here this evening because he is at the BMW Championship, where he witnessed one of the craziest playoffs that we've seen this year. So wasn't able to get here in time. So you just got me. Hope that's okay. All right. So a couple other things going on this week. Obviously, we have some earnings. So Zoom is on Monday. After hours, we'll be live for that to give our live reaction. So make sure that you're hitting the notification bell to get notified when we go live. So we'll be live. Obviously, if you're new to the channel, we go live from Monday through Thursday, 3:30 p.m. Eastern time. And if there are any earnings to react to, obviously we'll do that. So Zoom actually has earnings on Monday after hours. Their estimated earnings per share is $1.16. This is going to be interesting because we've been talking about this, with the Delta variant and really just the fact that people have been working from home now for 18 months or better, and it's not going anywhere anytime soon. And it's going to continue to be a thing. People hate the term new normal, but this is one of those things that is going to continue to be the new normal. So we look at the chart here, and it actually looks pretty solidly set up here for a nice catalyst. If Zoom comes in with good earnings, which I would imagine they do, I think they're going to shock the world. I think they're going to come in here with some pretty amazing growth. Despite the kind of growth that we've seen because of COVID, I think that the people are underestimating the fact that this stay-at-home or work-from-home trend is actually going to continue to be a thing. It's going to stick. And Zoom is the leader in that. Now, some people might make the argument that Zoom has competitors, and they do, but they are best at what they do. They are the best. Teams is there for sure, but Teams is garbage compared to Zoom. I've used both of them. It's terrible. But anyhow, this is Zoom, I think, is going to be something that's going to be exciting to watch. So make sure you guys tune in tomorrow for tomorrow's live stream. I think that they end up crushing earnings, and growth is going to be the big story here. What's their active users, all that good stuff. So that'll be certainly exciting to watch. CrowdStrike also has earnings on Tuesday after hours, and this thing has been a monster, a huge run up because of Palo Alto's earnings last week. Now, cybersecurity is something that we've talked about, and this is also another stock that we've had make regular appearances on the watch list for the Chaos crew, and this is something that I think is probably going to continue to roll as well. I really like the setup here. If we see a pullback, I don't know if I would be chasing this thing. I think CrowdStrike's going to come in with earnings, and they're still going to blow some people away, and it wouldn't surprise me if we saw a break over $300 a share by the end of next week with CrowdStrike. That being said, this is just something that I couldn't see myself chasing. If we do see a pullback, though, it would be likely to see one around $271 a share. So that's what I would be watching for on CrowdStrike. If by some chance we see some profit taking or any kind of pullback around 271, that's where I would be considering grabbing something. But I think it would be really tough to chase this all the way up here. Now, does this mean that it's not going to continue to go up? Absolutely not. I think it probably can And like I said, I think it wouldn't surprise me to see this up over $300 a share by the end of the week. And if CrowdStrike is any kind of indicator of what we saw from Palo Alto last week and the way that cybersecurity is going, I mean, cybersecurity continues to make headline news in all areas, not just big tech or government, but just all areas. We're seeing cybersecurity continue to make the trend. And again, kind of tying back to the working from home thing, if more people are working from home, there's going to be continued increased demand for cybersecurity. So CrowdStrike is going to continue to be one to watch for. Also, we have Wednesday after hours. There's quite a few of them. We got Chewy, Smith & Wesson, Okta, and Asana. And one big key one that I really liked was continuing to watch is Asana. Asana's been quietly, gone up 300, 400% this year, and nobody's really been paying attention to it, which has been crazy. What's in store for Asana this time around? I really don't know, but this is still going to be something that's going to be fun to watch. I would say if we look at this on the daily chart, overbought is an understatement here, but I would say that perhaps if they come in with amazing earnings, this is another one. Ties into the work from home side of things. Business solutions, if you guys don't know anything about Asana, it's essentially, revolves around a lot of things. They can do so much. Project management, all that good stuff. The closest thing that I can really relate it to would be, there was another company. I can't remember the name of it now. Dang. It'll come to me. Trello. Trello is the other one. If you guys are familiar with Trello, and very loosely Slack could be, something that you could tie it to as far as it being in the same space. But this is something that I think that it could continue to grow up. Looking at 80.74 is all-time highs. It closed on Friday at 77.39. So another one that I would say not to chase, but see how it reacts after earnings. And it wouldn't surprise me if we saw this go higher after earnings as well. Okta is definitely one to watch out for. Chewy, I think, could be a good one too. But those are all after hours on Wednesday, which we, again, will be live for. And then you have DocuSign. That's Thursday after hours. And it's just a theme here, guys. It's the theme for working from home, and I'm going to stick to my guns on this. It's not going away. DocuSign has continued to climb up and has had monster earnings the last time around in a quarter that a lot of people thought that perhaps they would see a little bit of slowdown in growth, and it just hasn't happened. Could it be this quarter that we see that? I'm not so sure. We'll see, but I don't think so. I think this is just the beginning for a company like DocuSign because it doesn't really have competitors that can hold a candle next to it. And when you look at companies like this with tons of growth potential still behind it, I don't see how DocuSign slows down anytime soon. So it'll be interesting to see what their earnings look like this time around, especially during the summer months. And we'll keep an eye on it. As far as should we be looking at a possible entry before earnings? I still think that this is another one where I would be cautious about. And so looking to see what the reaction is afterwards is probably going to be key here. Looking here at the 50-day moving average is at $291 a share. And let's see if it pulls back to at least that area. If it pulls back to the 50-day, then I think that probably would be reasonable. So just keep an eye on that. But we, again, will be live for that one on Thursday at 3:30 p.m. Eastern Time to give you our live reactions to DocuSign. All right, guys. We have the top stocks for September coming up. And before we do that, we got 120 of you guys in here. So go ahead and hit that thumbs up if you haven't done so already. We got 53 likes. I think it's certainly reasonable to get us to as close to 100 as possible. As close to 100 as possible. By the way, I saw that Rudy Brown is in here, and good to hear that he's got power to at least watch the stream. We got Rudy Brown, and if anybody else is in Louisiana, Mississippi, that area that's getting trounced by Hurricane Ida, first of all, you're my thoughts, man. It's a breath of fresh air to hear that he's doing all right. He's doing well enough to be tuning into the stream, so appreciate you, buddy. Anybody else who's watching from that area, please stay safe. Don't do anything dumb. But yeah, that is, it's been a really tough to watch. On the same day that Katrina hit, this is also hitting. Category 4 hurricane down there. So thoughts are with you, man. If you need anything, if anybody who's in the Chaos fam needs anything, needs us to come down, needs us to raise some money, whatever, we'll make it happen. Even if I got to go down there and start helping rebuilding homes myself, I will. And I have done it before. All right. I did it during Hurricane Harvey. So it's kind of, I love being able to give back when I can. And so if we can do it, we'll make it happen. But yeah, praying for you guys. Speaking of which, it's a category 3 now. Okay. Yeah. Just before I came in, it was a cat 4 last I saw before coming live. So at least it looks like it might be weakening a little bit, but, man, the outer bands are going all the way up to Memphis, Tennessee. That's wild. That's wild. Anyways, yeah, that's crazy. So I don't want to feel like we're capitalizing on it, but one of the top five stocks that I have that I'm watching for September is OIH. And if you guys aren't familiar with OIH, it's an ETF. We'll take a look at the chart here on Webull. It's actually been making a really good move, and I'm still slightly red on it. My average is around $203 a share. But I originally thought that OIH was going to continue to do well because people, I guess, reducing some of their anxiety as far as the Delta variant's concerned. We're seeing a lowering in cases. They're dropping off pretty rapidly. So we're seeing demand for oil go right back up. And we saw a huge jump in oil this past week. And a lot of it could have been in anticipation of Hurricane Ida. There is, oil companies airlifting all of their workers off the rigs before Ida came in and started wreaking havoc. And 90% of the refinery and oil production down in that region has halted. So there's that too. Not to say that we're going to be capitalizing on people's or we should be capitalizing on people's misfortune, but it just so happens that this is also kind of just adds another layer to that for the month of September. And I think that the energy sector in general was going to be leading the market going into the end of the year anyway, but this I think just adds more fuel to the fire, no pun intended. Am I right? See what I did there? Damn, yeah, Rudy Brown's getting 130 mile an hour winds. That's crazy, man. Yeah, man, just stay safe. It says still has cell coverage for now. That's crazy. So yeah, there's OIH you could look at. Now this is the ETF. It's the oil services ETF. There's a couple of other reasons why I like this. You look at oil right now, and it's close to $70 a share again. The last time it was at, or $70 a barrel, sorry, excuse me. The last time it was at $70 a barrel, the oil services industry was in the 500s. So $70 a barrel for oil was right around 2016. And you can see that OIH, the oil services industry, was right around the $700 range. Now, I'm not saying that where it's sitting at right now at 191, that it's going to go all the way back up to $700. But you would think that it could at least get to half of that, given where the price of oil is right now. So could we see a double from OIH? I certainly think it's possible. I'm not going to sit here and guarantee you that it'll happen, but it certainly seems possible from here. So there's just a lot of good things that I think that if you look at the oil services industry, and if you want to break it down to specific stock, you could look at Halliburton, which is one of the two heavyweights in the ETF itself, which again, actually pretty cheaply priced, but you're taking the risk of just holding that one particular company and expecting them to do well, which they probably will, but maybe not double from here. You look at something like Schlumberger as well, ticker symbol SLB. This is the second heaviest. I think Halliburton's number one, Schlumberger is number two in the OIH ETF. So these are the two heaviest weighted companies that are in there. They don't necessarily have the same type of movements that OIH has had. So there's definitely a little bit of a disconnect here. But nevertheless, it's been OIH in general has been lagging the rest of the market. You look at the energy market. You look at the XLE, for example, and it's actually pretty close to where it was as far as the price of oil. It's not necessarily, it's still far off. It's still lagging the price of oil compared to what we saw it in 2016. But it's not quite as bad as what we saw from like an OIH, for example. So it's very interesting to watch this. And so I think that there's going to be a catch up at some point. And so for that reason, it's going to be one of the stocks to watch for September. All right, next is going to be Penn. Penn National has gone up 35% over the last 2 weeks. This is a weekly chart, guys. Weekly chart here. So last week was just an absolute boner candle, right? This thing has gone crazy. We'll bring it back to the daily chart, and it's still got lots of room to run, folks. I mean, it broke right back through that $80 mark like butter. I mean, it was a pretty tough resistance for it previously, and it just went right through it. Now, the next stop for this thing should be around the 200-day moving average. We look at this at $89 a share. If it gets up over the 200-day moving average, this thing probably has a lot more room to run, and we can start having the conversation of about $100 a share. And I think that actually could happen in September. A big week took place this weekend as far as sports betting is concerned. The Barstool fam, really heavy presence in the college sports area, and football started this weekend. So I think that this is going to be something that's going to continue to roll, especially as the NFL starts. It's the biggest time of the year for sports betting, and Penn National is going to benefit greatly from this. Not only that, but obviously we talk about the casinos in general, and Penn National is the largest regional casino in the country. Delta is starting to not scare people as much, folks. So the casinos are going to continue to roll here. We saw that COVID Delta variant and COVID restrictions were being loosened in Macau, which is good for the casinos all the way around. We saw MGM and Wynn Resorts do really well over the last couple of weeks as well. But Penn National, in my opinion, actually does have a lot of good reasons to continue to roll here because they don't have that kind of exposure in Asia either. So as long as the U.S. is continuing to do well and trend in the right direction, so should Penn. All right, next is going to be Airbnb. Now, this is one that's been interesting. It had a huge move when they came out and announced that they were going to be housing around 20,000 refugees, and they were going to use their Airbnb charity to do that with. The CEO mentioned that he was going to put his own money into this as well as raise funds elsewhere. And we'll see where this goes. It had a pretty decent correction, but actually held up over its support really well. Some may argue here that Airbnb is overvalued. Now, from a forward PE standpoint, okay, fine. We can play that game. The fact of the matter is, though, that Airbnb is going to have a record quarter. They're on pace to have a record quarter again in this quarter that we're in right now. And we're not done with COVID yet. We're getting there. People are getting less and less afraid, and we're starting to see demand return, but it's not like it was. So Airbnb could grow into that valuation like nothing. It won't take much for them to grow into that valuation. I think they could do it. So let's just move that aside and look at the chart. We take a look at the chart here, and again, like I said, with the pullback here and it testing the 50-day the 155 area, it's been holding it pretty well with its recent pullback, and so I think that this actually has the ability to run back to that 180 area. And remember, this is the stock that we said we had mentioned that had the ability to, if you invested $50,000 in it, had the ability to actually grow and make you $1 million in 20 years. Now, 20 years is a long time, but I think that with what we're seeing from them as far as this particular quarter is concerned, I think that we could see a monster earnings report from them next time around. We could get some preliminary numbers out of Airbnb as well. So they're not going away anytime soon, and I really like them this month as well. We get a move up above 165, and I think Airbnb could make another move towards 180, and that will be the sweet spot for them. So looking at the next one here, we covered OIH, we covered Penn National, we covered Airbnb. The next one's Goldman Sachs. Okay, Goldman Sachs here is interesting because it's at all-time highs. It touched all-time highs on Thursday. Couple things that I want to bring to your attention. We just got done talking about Airbnb's forward PE, right? Amazon's PE is 58 times. So Amazon's trading at 58 times their earnings. Airbnb is trading well above that. I think it's like 30, 40 times their earnings. And you look at Apple, for example. Let me pull up Apple's. Apple's PE, I think it's somewhere around 29. 29 is Apple's. The S&P 500 is trading at 25 times PE. They're forward. So their earnings, they're trading 25 times earnings in the whole entire index. Do you know where Goldman Sachs is? Goldman Sachs is up 57% on the year. Goldman Sachs PE is at 7 times earnings. So despite the fact that this has gone up like crazy over this year, it's still lagging the market as far as their PE is concerned. We take a look at the chart here. Look, it's made monster moves, and I'm going to pat myself on the back here a little bit because I talked about this monster move back in January, and I said, listen, the XLF, we could take a look at the ETF for the financials industry, and it was bound to break out. Called this breakout back down here, and it was perfect. It was a perfect breakout, continued to roll up, and we come back to Goldman Sachs, and they still stand to benefit from a lot of things here. We have the potential interest rate hike taking place, the tapering of the repurchasing of bonds from the Fed, and a roaring economy. It's trading 7 times earnings. There's still a lot left for this to go, in my opinion. Now, does it mean that you should be just chasing this thing? No, but you buy into weakness. So if this looks like it may come down to retest the 50-day moving average, for example, I think that could be a really good opportunity. If we see this come back down to the 395 area, I think that could be a good opportunity even. But the reason that I put this on for September is because we're seeing a massive amount of buybacks from the financials industry, and really everyone in the market right now is announcing buybacks. We saw it from Palo Alto. It seems as if every other earnings report that comes out, they're announcing buybacks, particularly in the financials industry, which they just love to do. So dividend increases, buybacks, all that stuff, all good reasons why Goldman Sachs may continue to go up. And so just because this is at all-time highs and it's gone up 50, 60% this year doesn't mean it can't keep going, folks. I think one of the big things that people get caught up on is, it's like playing Russian roulette, right? Oh, well, I've hit, red 5 times. I'm bound to hit black on the 6th one. And it's like, you don't have to. You can hit red 5 more times. So, when you're playing with laws of probability, I think people do get in their feelings a little bit as far as, how much the stock has gone up. But when you really look at how the valuation of Goldman Sachs, it's not overvalued when you compare it to really the market itself. It's actually still undervalued compared to the market. So I think Goldman Sachs actually does continue to roar up from here. Where does it go? I think it's anybody's guess, but I think it goes higher nevertheless. See what I did there? I totally didn't do that on purpose. And that is going to do it, guys. We covered Penn National, Amazon. Oh, no, I'm sorry. Just kidding. Amazon. Amazon's number 5. I can't even count to 5 today. Can't even count to 5. But here's the thing about Amazon, too. This actually started to make a pretty decent bounce. Obviously, the deal with the firm is certainly going to do good things for Amazon. We've talked about potential mergers and acquisitions that Amazon could go after. I didn't even think about Affirm being one of them, but that certainly could be on the table for them. But we also made mention of speculating around the fact that maybe they could be looking at potentially buying Kohl's. They already have a solid relationship with them. They have stake in Kohl's, and they are interested in building brick and mortar businesses, a brick and mortar business for particularly in clothing. And Kohl's already has clothing stores. So would it really be that difficult or hard for Amazon to just be like, hey, we want to buy you? Either way, retail is going insane and people are spending money like crazy. And we've seen that from all of the earnings reports from retail itself. So to think that e-commerce is going to be slowing down here, I think is a bit silly. People are out there spending money. We're seeing savings rates at all-time highs from consumers, or close to it, I should say. I don't want to say at all-time highs, close to all-time highs. It's around 20%, which is pretty crazy. And so people want to spend money. The demand is there, and it's not going to slow down. So anytime soon. We look at Amazon. It's made a hell of a bounce from 31, 32. I have some of it around 32.43 personally. I was waiting for this to actually have a red day since I bought into it, and it just really hasn't. So if this does pull back, I think that we could see it potentially pull back to around 4,300. We'll see if that happens, but if it does that, I think it may add to it. But I'm really watching this resistance up at 34.10-ish. And I think that could be the spot that we watch this potentially break back out. Now, I've made mention that I think Amazon is a $4,000 stock, and I thought that it could be possible to see $4,000 by the end of the year. I stand by that. We have the holiday season coming up as well, which should bode well for Amazon. They got so many good things going on, guys. Let's not forget about AWS, okay? So with that Affirm deal, with, them looking to, have physical standing buildings, especially when it comes to clothing and retail, I think Amazon's going to be something, and just the chart setup itself, I think could be a good one to watch for September. So those are your 5. Sorry I missed out on Amazon last minute, but we covered Penn National, Amazon, Airbnb, Goldman Sachs, and OIH. Those are your top 5 stocks for September. We're going to be covering those a little bit more in depth later in the week. Don Fran's actually coming on the show, so looking forward to that as well. Make sure you guys are subscribed to the channel if you guys want to see that. I do see a donation from Michael Hanna, who's been donating the hell to this channel, and I really appreciate it, Mike. Can't thank you enough. Can't thank anybody enough who continues to donate to the channel, especially with our Chaos Crew members as well. But Mike says, I want you to know your take on Upstart. I am going all in buying puts. If you're buying puts on Upstart, I don't know, man. Upstart had a monster earnings call was it 2 weeks ago, I want to say? Yeah, 2 weeks ago. Let's take a look at the chart here. And this has actually been doing really well. It's hard for me to say you should go short on this. I mean, we're in the midst of a everything rally at this point, and it's hard for me to be like, yeah, you should probably short this just because it's gone up. Now, is it overbought? Sure. Is it overvalued? Maybe. But there's a lot going on here with Upstart that I don't know if I would be short on this. So we'll see. I would almost think it'd probably be better to sell some puts. Sell some puts and see where it goes. Yeah, I wouldn't be long or short on Upstart at this point, but I think that I don't know if I definitely wouldn't be short. Let's put it that way. Thanks, Stuart Castro. Appreciate you. Yeah, we got 138 of you guys in here with 90 likes. I was asking for 100. Can we get 10 more? That would be awesome. Let's check out a couple other questions in here since I got through everything that I wanted to chat with you guys about. Philip Stroh says, what's your thoughts on the Rivian ordeal? By the way, did you guys see the troll that Elon Musk had on this Rivian thing? Okay, so Rivian is, if you guys don't know the company Rivian, Rivian is a EV company, particularly in the truck, pickup truck space. That's kind of like what they're trying to do. So Rivian has filed for an initial public offering and is seeking a roughly $80 billion valuation. The company would like to do an IPO around the November 5th, which would be the Thanksgiving holiday, which takes some balls. $80 billion? That would inherently be the largest IPO on record, if I'm not mistaken. I don't know if there's a bigger one. Coinbase was pretty big. Robinhood was kind of big, but not even close to $80 billion. $80 billion, I think, probably would be either the largest IPO or close to the largest IPO in history. They haven't delivered one truck. Not one. They haven't delivered one. And Elon Musk actually trolled the shit out of them. Says, don't want to be unreasonable. He responded to this. But maybe they should be required to deliver at least one vehicle per $1 billion of valuation before the IPO. Elon Musk said that in a tweet. What are they thinking? So, as far as that's concerned, my thoughts are right there with Elon. What are they thinking trying to raise $80 billion? They haven't made one delivery? That's crazy. So, okay. Bruce says, I have a Polish. Yeah, I was out golfing with my brother-in-law. Today. So I went golfing. I came straight here. All right. I think that's going to do it for me, guys. I appreciate you guys hanging out. We got 96 likes. If we can get 4 more to 100, that would be nice. But I really appreciate you hanging out and dealing with me. Yeah, we'll be back tomorrow, 3:30 p.m. Eastern time. I will be live, and we'll be giving our live reactions to Zoom, which should be a lot of fun. And I'm sure we'll be giving some more reaction to the Affirm news, and I cannot wait. I would love to see Affirm tomorrow up over $100 a share. After hours on Friday, it went up to $103 after closing the day at $67. I'm up 50% on that, and most of our folks in the Chaos Crew are as well. If you're not part of the Chaos Crew, hit that join button next to subscribe. Affirm was the stock that we put on our watch list on a regular basis because we had so much conviction in it and brought the attention to a lot of our viewers and our Chaos Crew in particular. But if you guys want more access to that, plus everyday access to that watch list, we give you 5 stocks every day, and it is in depth, very detailed, why we like them and why we considered watching them for that day and maybe beyond that. If you guys want to, hit the join button next to subscribe. It's $4.99. Like I said at the beginning of the show, you won't even miss it being gone. All right. It's a ton of value for just $5 a month. And also you get access to our Discord group, which is a great community. It's not just the watch list, guys. You get all kinds of stuff. So hit the join button next to subscribe. We'd love to have you guys there. And that's going to do it for me. Thanks so much. And thanks for the 100 likes. You asked for 100, you get 100. It's always nice when that happens. That's going to do it for me, guys. Thanks so much for hanging out. We'll see you tomorrow at 3:30 p.m. Eastern time. See ya. B. Smith is out. When was the last time I did that? It's been a minute. Peace.